Retire early from $0. Financial independence, retire early. A successful early retirement can be a challenging financial objective, but it is possible if you have the correct strategy in place. The reasoning for this is very easy to grasp, yet, from the point of view of many individuals, it may appear intimidating. There is no alternative to saving for retirement. However, some individuals have discovered techniques to complete laborious tasks more quickly. They accelerate their savings, reduce their expenditures, and optimize their investments to become financially independent and retire early. That's why today, we're going to lay out some steps you can take to figure out if early retirement is attainable for you, and if so, what you'll need to do to make it a reality. Welcome to Savvy, where we have lots of practical wisdom to share. Hey, don't forget to hit the like button below, subscribe, and hit the notification bell for more advice here on Savvy. A person's annual income does not impact his or her ability to accumulate sufficient wealth for a comfortable retirement. Although it's widely acknowledged that saving a sizable amount of one's salary is important to reaching financial independence, it isn't just for everyone. We understand if it seems severe from other people's perspectives, but the primary guideline for being able to retire in 10 years is saving your money, not raising your salary. If you consistently blow through your entire paycheck, you will never have enough money saved up for retirement. If you save 25% of your income, however, you can retire in 32 years without sacrificing your current standard of living. See the difference? A higher savings rate is preferable when it comes to achieving financial freedom and living life on your own terms as quickly as possible. And since we're on the topic of money, cutting back on your outgoing expenditures is the next step toward an early retirement fund. You should put aside as much money as possible and live frugally. Most of you will immediately imagine a chronic cheapskate, but we don't think drastic measures are necessary to save money. For example, housing costs can quickly become your biggest expense and take up as much as half of your take-home pay. But it would be smart if you could buy a building with several units, live in one, and rent out the others to make a steady income and have free housing. This needs a down payment of 10 to 20% of the total price. But you can use that to ensure you never have to pay rent again for the rest of your life. Rent hacking is a way to lower your monthly housing costs without saving for a down payment. If there is something that you want to buy but can't afford it right now, it is crucial to keep in mind that you should wait a week before making the purchase. A delay of 1 or 2 days diminishes the possibility of obtaining something. The following guidance you should consider is to steer clear of taking out any loans with exceptionally high interest rates. Since cutting back on expenses and increasing savings go hand in hand, high-interest debts and loans are the nemesis of financial freedom. Retirement is still within your financial reach, even if you have high-interest debt. That is why it is essential never to finance something you don't have the cash for right away, and only get into debt if it's for a fixed-rate low-interest loan that can be written off on your taxes. Additionally, you will need to invest if you plan on retiring in the next decade. Under the right conditions, doing so may hasten your arrival at financial independence. To achieve financial success, it is also essential to think of ways to bring more money in. It is a clever idea to become a long-term investor that invests consistently. It is vital to save and invest a certain percentage of what you earn, regardless of how small. After that, you shouldn't try to time the market based on where prices are right now. Also, put your money in a Vanguard market-wide index fund with little to no annual fees. Invest advantage of the low fees and competitive rates. Another factor is that long-term price trends tend to rise when markets are leveled low. This is where things get more complicated because you will need to calculate how long this will take and work out ways to hasten the procedure. If you don't want to work until you are 70 and have no plans to retire in the next decade, you need to do several things. For instance, at a yearly salary of $70,000, if you save and invest the extra money, you'll be able to live well on $20,000 a year after a decade. If you really need the money, you can always obtain a second job. And you don't have to keep working as long as you keep your existing expenses. Nonetheless, you would never have to worry about debt or getting a job. Without a rise in income, you will need to put away 65% of your earnings each year for the following decade to be able to retire in that time. If you don't want to live on the bare minimum, a conventional profession might not be able to propel you to the middle class in 10 years. Unless, of course, the salary is high. If you want to be financially independent by the time you're 60, you should look for careers that pay you more for the time and energy you put into them. There are only 24 hours a day, which is the major disadvantage of working without overtime pay. This means there is a ceiling on how much money you can make. On the other hand, if your pay depends on your output, streamlining your processes could boost your earnings without requiring you to put in extra time or effort. Choosing a career in which your talents can be put to use to generate more money with less effort on your part is of the utmost importance. Investments may hasten the process, but their effectiveness depends on how actively you wish to participate. Saving $50,000 annually could be used toward purchasing or upgrading a home in 2050, for instance. If you invest $100,000 in renovations, the home's value may rise to $300, doubling your money in just 1 year and giving you a great investment property that you can start renting immediately. You could theoretically retire in 10 years if you discover this strategy suited to you. If you can lower your expenses while increasing your income, you can use this information as a rough guide to track progress toward your objective. To retire in 10 years, you must make enough money to put away between 65 and 90% of your salary annually. It may be a rough path, but the journey will be worth it once you get to the goal. That's enough practical wisdom for today. Don't forget to give us a thumbs up below. We will be posting 4 to 5 videos per week, so click the subscribe button and the notification bell to be notified of our new videos weekly. Thanks for tuning in. See you in the next video.